Today's odds, 20%. That's how much the crowd's belief that the US will confirm aliens dropped after Donald Trump announced he'd release the classified UFO files. Apparently, nothing kills belief in a conspiracy theory quite like the promise of evidence. Still, 20% isn't nothing. In fact, Polymarket currently thinks alien confirmation is about twice as likely as Brazil winning the Football World Cup. So, if you're Brazilian, bad news. The truth may be out there, but the sixth star probably isn't. Welcome to Prediction Market Prof, the channel that analyzes the wisdom of the crowds. In the slightly laryngitis-y episode, we'll be asking what the prediction market whales and insiders are doing, whether sports betting can ever be part of a sensible portfolio, and which positions we opened, closed, and held this week. This week's market movers. Odds of reopening the Strait by the end of May jumped from 16% to 39% after Trump claimed major military success and hinted at peace talks, then drifted back down as Project Freedom collapsed and Iran dismissed the one-page deal with contempt. Second, odds on Ron DeSantis and Tucker Carlson surged, while confidence in Trump-aligned favourites weakened. The succession trade is currently less settled than it once looked. Finally, the England World Cup whale. Polymarket Whale Countryside generated a 470% return on yes contract for England to win the World Cup, more than a month before the tournaments even started. Smart trading or excessive patriotism with leverage? Let's find out. Now, let's go whale watching. This week, the whales appear to be hunting in two very different oceans: war markets and World Cup futures. The biggest story is still the Iran-US-Israel complex. The public markets have been swinging violently around ceasefire rumors, shipping restrictions, missile attacks, and the question of whether the Strait of Hormuz gets back to normal. The broader Hormuz trade remains one of the main geopolitical arenas on Polymarket. Markets on whether traffic returns to normal, whether Trump lifts the blockade, and how many ships actually transit the strait. And the whale activity looks exactly like you would expect in a crisis: fragmented, fast, and highly sensitive to diplomatic signals. One-tracked whale 1123 has been trading across multiple Iran-linked contracts: peace deals, ceasefire extensions, diplomatic meetings, Trump ending military operations, and the Strait of Hormuz traffic returning to normal. The pattern is not just war yes or peace yes, it's a basket of short-dated geopolitical timing trades. That matters because the edge in these markets may not be ideological, it may be timing. The trader who understands whether an announcement lands before April 22nd, April 30th, or May 31st can make money even if their general geopolitical view is not especially deep. But our underlying thesis hasn't changed. With Project Freedom's collapse, fewer ships are making it through the strait. Whatever the bluster from the White House, to the impartial observer, it looks increasingly clear that Iran still controls the strait. So when Trump announced tremendous military success and the market briefly pushed the odds of reopening by the end of May from 16 to 39%, we didn't see a fundamental change. We saw a gap open between political theatre and operational reality. And gaps like that are where markets get interesting. If the underlying situation hasn't materially improved, but the crowd suddenly prices in optimism, then contracts reflecting higher oil prices and below normal straight traffic become cheaper than they should be. That was the opportunity. That's what we did, as discussed in last week's video. We bought into the view that the strait would remain constrained and that oil risk markets had underpriced a continuing disruption. So far, that trade is paying off. And this is the broader whale-watching lesson. In geopolitics, the market isn't just pricing reality, it's pricing press conferences, rumors, and the half-life of diplomatic optimism. When the situation materially changes, we will tell you. Until then, we are treating White House optimism as a market-moving headline, not a shipping report. The more cheerful whale story is the World Cup. Polymarket's 2026 FIFA World Cup winner market is enormous, with France, Spain, Brazil, and England and Argentina all attracting serious volume and attention. But the wallet to watch here is Countryside. Countryside's open World Cup positions are extraordinary. The account is holding yes contracts on several teams, including Brazil, England, Argentina, the Netherlands, Colombia, Norway, Morocco, and a long tail of much less likely winners. The headline number is striking. Countryside generated a 470% return on yes contracts for England to win the World Cup, more than a month before the tournaments even started. That slightly complicates the obvious joke. This doesn't look like simple patriotic betting on England, it looks more like early futures accumulation. Buying teams before the market fully prices qualification, draw effects, squad narratives, or the sheer liquidity surge that comes as the tournament approaches. In other words, Countryside may not need England to win the World Cup. Countryside may only need England to become more fashionable. And that's an important distinction. A sports fan asks, will England win? A trader asks, will someone later pay more for England than I paid today? Those are not the same question, which explains quite a lot of both finance and English football. So this month's whale pattern looks like this. In geopolitics, whales are capitalizing on short-dated event timing, ceasefire announcements, diplomatic meetings, military pauses, oil shocks, and shipping normalization. The market is not just pricing war and peace, it's pricing the next headline. In the World Cup, Countryside is capitalizing on long-dated narrative repricing, buying tournament futures early before mainstream attention and liquidity fully arrive. That gives us a useful contrast. The Iran on Hormuz trade is about information speed, the World Cup trade is about positioning early. One rewards knowing what might be announced tonight, the other rewards knowing what people will want to believe next month. And that is our whale watching lesson for the week. Sometimes the smart money is informed, sometimes it's early, and sometimes, especially with England at a World Cup, it's simply very brave. I've suggested previously that betting on sports markets is far too much like gambling than it is like investing in a portfolio of stocks, and so we've largely ignored it. But in this episode, we're going to question whether sports gambling or investing in futures contracts in sports is necessarily gambling, or whether it can be more like investing. If you look through the Polymarket Sports leaderboard, you'll find some huge winners. Polymarket is peer-to-peer traders betting against one another, and the platform takes its cut. So yes, some people are making serious money on UFC, football, and World Cup markets. But are they skilled traders or just lucky degenerate gamblers, top of the leaderboard this week and broke next month? Most sports bettors are probably the latter, but Countryside's portfolio looks more interesting. There seems to be a pattern. Identify underpriced teams early before the market fully wakes up. England at 2 cents was a bargain. They probably won't win the World Cup because obviously, England. But they've reached the late stages of several major tournaments recently, so the trade wasn't necessarily England will win, but rather England will become more expensive. Brazil was similar, bought at around 3 cents, later trading at 9. Brazil are always a public favourite, even if their true chance of winning isn't high. The market was likely to reprice them upwards before the tournament, and that's exactly what's happened. That's the key distinction. A gambler asks, will this team win? A trader asks, will someone pay more for this contract later? It remains to be seen what Countryside does next. Personally, after those gains, I'd be tempted to take the money and run. Those trades have now mostly played out, but there may be others. One that stands out to me is Belgium. Belgium's golden generation is fading, and they're probably no longer a top 3 side, but they still have world-class players, tournament experience, and a favourable group, Egypt, Iran, and New Zealand. Do I think Belgium will win the World Cup? No. But again, that's not the trade. The trade is buying before the group stage and potentially selling after Belgium qualify when casual money and knockout stage hype start pushing the price up. So here's the principle. If we are treating prediction markets like an investment portfolio, I generally don't like holding sports contracts to resolution, unless it's arbitrage or unless losing is practically impossible. And in sport, losing is always possible. There are injuries, red cards, penalties, referees, and the permanent cosmic joke of extra time. But if you have a clear trading plan, including an exit strategy, sports contracts might be part of a sensible diversified portfolio. Not because sport is safe, it isn't, but because sometimes you're not betting on who wins, you're betting on what the crowd will believe before they find out. Finally, portfolio moves for the week. This week we added to our no positions on the Strait of Hormuz, returning to normal traffic, as those positions temporarily moved into the red. They're now back in profit. The thesis hasn't changed, at least until the ships are actually moving normally. I'm not treating White House optimism as operational reality. We took 50% profit on Musk beating Altman in his court case. That market is now at 43 cents. I don't want to wait for the market verdict, so we're going to close the rest of the position now for a 24% gain. Good trade. Thesis played out enough, no need to get heroic. We added John Ossoff to our next Democratic nominee portfolio alongside Gavin Newsom. I still think Newsom is the more likely winner, but Ossoff appears to be making moves, and at 6.6 cents and cheaper than Kamala Harris and AOC, I think he's underpriced. We also closed our no position on psychedelic approval by 2026 for a 25% loss. The situation materially changed, and sometimes the correct move isn't to defend the old thesis, it's to take the loss and move on. Painful, but cleaner than pretending. Our positions on Kash Patel out by June and RFK Jr. out by December have both moved into the green. On RFK, Trump's recent appointment of a more respectable epidemiologist to head the CDC suggests a significant change of tack and a move away from the foil hat anti-vax wing of the coalition. MAHA voters remain an important part of Trump's base, but it looks increasingly plausible that the administration will try to manage RFK out. On Kash Patel, he's now fighting accusations of drinking on the job. He looks innocent enough to me, sort of, but the market isn't convinced. That said, June is fast approaching, and I don't want to sit around waiting for resolution risk. So we're taking the 17% gain and closing the position. Finally, Alphabet is the biggest company in the world by December, is down 4%, but there's no material change to this thesis, so we hold. So the portfolio lesson this week is simple. Add when the thesis strengthens and the price moves against you. Exit when the thesis has played out, take losses when the facts change, and never confuse being right, eventually, with being paid on time. Okay, so that's it for this week's market wrap. The crowd briefly believed in peace in the Strait of Hormuz, then began to sober up. The whale showed us the difference between being informed and being early. Countryside reminded us that sports markets are not always just gambling, sometimes they are narrative trades with shin pads. And the portfolio had a mixed but useful week. Some gains taken, one loss accepted, and a few theses still intact. Thanks for joining me on Prediction Market Prof. I'm Professor Benjamin Smart. If there are any markets you think I should be looking at, let me know in the comments and tell me why. Please like, subscribe, and I'll see you on the next one.